On February 4th, 2013, 6 minutes after the stock market opened in Tokyo, many well-known stocks, including SoftBank, hadn't been traded yet. SoftBank's offer price dropped by 5% and kept falling, but nobody was willing to buy it. After some time, a purchase order was completed. 300,000 shares were bought at 6,714 yen per share, totaling just over 2 billion yen, which is almost $21 million. This triggered more buyers to join in, creating momentum, and by the end of the day, the stock became one of the only 2 gainers in the Nikkei 225 stock average. The person who made the market activity for SoftBank on that winter morning was sitting in pajamas in a bedroom filled with comic books. He leaned into the bright light of 4 computer screens while munching on a carrot, perhaps to soothe his stomach. Investing in stock rebounds was risky, but observing SoftBank's 20% value decline over 9 days, coupled with a further drop in U.S. markets overnight, convinced him that the chances of a bounce were increasing. Assessing the situation, he made the decision to act, rapidly placing orders to execute his strategy. An hour and a half later, he sold his holdings, making a profit of 140.6 million yen, $1.46 million. "I do my best work when other people are panicking," he said, about an hour after winding up the biggest trade of a long career betting on stocks. Without pausing, the former video game champion and pachinko gambler known as CIS swiftly moved on to the next trade. The 35-year-old day trader claimed to have earned 6 billion yen, almost $63 million after taxes, by betting on Japanese stocks that day. Over the course of a decade dedicated to day trading, starting practically from the ground up, CIS claims to have accumulated a fortune surpassing 16 billion yen, $167 million. Along the way, he has gained a cult following among Japanese day traders, a close-knit community of self-taught experts who pride themselves on navigating one of the world's toughest markets. CIS in that era became a subject of considerable discussion and speculation, even prompting the creation of a Wikipedia page to document his investment outcomes. He presented several statements from one of his numerous brokerage accounts for the year 2014, along with his tax return for 2013. These brokerage statements indicated liquid assets ranging from 4.4 billion yen to 4.8 billion yen. His tax return revealed that he traded Japanese equities worth 1.7 trillion yen in 2013, approximately 0.5% of the total value of individual share transactions on the Tokyo Stock Exchange. On his most active day, he claims to have bought and sold stocks totaling 70 billion yen, over $700 million. "That's the end of my epic rebound trade." His profit, he said, had almost tripled. CIS discovered he had a talent for winning games. At 15, he says, he could earn 400,000 yen a month gambling. One secret was identifying the machines most likely to give bigger payouts. Another was being able to endure 13 hours at a time in smoke-filled and deafeningly loud pachinko parlors. He had to play thousands of consecutive games to take advantage of the odds. You need to find an edge and exploit that edge and do it over and over again. If you're a day trader or a swing trader, then you know that you have to do a lot of trades to make a difference in your account for the year. CIS, pronounced CIS, means death in classical Japanese. The nickname is a holdover from his gaming days, when he used to crush foes in virtual wrestling rings and online fantasy worlds. "Games taught me to think fast and stay calm," he said over tea at Tokyo's Hotel Grand Palace a few days after the SoftBank trade. Rail thin, with a shaggy mop of hair, he showed up in a gray sweater, jeans, and sneakers. No one would have taken him for a multi-millionaire. CIS wants people to know what he's accomplished. He just doesn't want them to know who he is. Even after 6 sit-down interviews over many months, CIS asked not to be named for this story. Married with 3 kids, he says he's worried about being targeted for robbery or extortion. He said being a Japanese day trader in 2013 proved to be highly lucrative. Thanks to Prime Minister Shinzo Abe's efforts, the Bank of Japan injected cash into the market through an asset-buying program. Additionally, a loosening of borrowing limits enabled traders using margin to quickly roll over loans upon exiting a position. Now, the combination of these 2 factors created a powerful and favorable environment for day trading. In 2013, the benchmark Nikkei 225 experienced a big surge, increasing by over half, marking the most substantial gain in 4 decades. The the Mothers Index, consisting of small-cap stocks and popular among retail investors, saw an astonishing rise of 137%. The Tokyo Stock Exchange reported that the volume of shares traded by individual investors more than doubled during this period. It wasn't because more people were pumping retirement money into the market, though Abe's policies were meant to encourage that. It was super active day traders, says Akira Warita, managing director at Matsui Securities. 1% of the online brokerage's clients accounted for 70% of its turnover during the last 3 months of 2013. The 397 people who made 50 or more trades a day were responsible for more than half of the brokerage's margin transactions. The most leveraged trader used a cash deposit of 20 million yen to buy and sell 4 billion yen worth of equities in a single day. The truth is, Japanese day traders have gotten so big, the market can no longer ignore them or the huge price swings they amplify, says David Baran, co-chief executive officer of Symphony Financial Partners, a $455 million Tokyo hedge fund firm. I've been trading Japanese stocks for almost 30 years, and I've been through periods of extreme volatility, but I've never seen anything like what we've seen in 2013, Baran says. CIS's first big score came on December 8, 2005. Back in 2005, someone at Mizuho Securities made a big mistake. They wanted to sell one share of a small company called JCOM for 610,000 yen, but they accidentally offered 610,000 shares for just 1 yen each. This was way more than the actual number of shares available. CIS, along with a few other traders, saw this had to be a mistake and quickly jumped in. CIS says he bought 3,300 shares, about a quarter of the total, at the very low price. That's how he made his first big win. When the confusion was cleared up, Mizuho Securities had lost its quarterly profit, and according to CIS, he was 600 million yen richer. Another day trader named Takashi Kotegawa, known as BNF, reportedly made over 2 billion yen. Even today, the JCOM trade stands out as the best 10 minutes of CIS's professional life. However, he didn't take the time to celebrate. Instead, he swiftly moved his winnings into the video game company Nintendo. His logic was that the likely legal issues arising from the morning's events, it would be more challenging for anyone to take away his gains if they were invested rather than in cash. Additionally, he took a negative stance on brokerages by shorting them, anticipating that financial shares might face consequences due to the earlier mistake. Several fan blogs devoted to CIS sprang up after the JCOM trade, one called CIS Mania. That site is no longer around, but in the summer of 2013, someone offered a Wikipedia page about CIS. It's complete with a bar chart purporting to show how his fortune snowballed, starting with 1 million yen, about $10,440 in 2000. The numbers are a little off, CIS says, but the basic idea is right. In the early days of his career, CIS gained recognition by engaging in trash talk on 2 Channel, Japan's most popular online bulletin board. He became infamous for lines like, "Even Goldman Sachs can't outtrade me," and "I'll casually flush some cheap wine that only set me back 800,000 yen. In 2011, CIS made a rare TV appearance on the popular variety show Warate Litomo, which translates to "It's okay to laugh." The show has since ended after a 32-year run. During the appearance, he wore a translucent box over his head and used a voice modulator to speak, preserving his anonymity. "Who are you?" the host asked. "I'm a man who made 10 billion yen day trading," CIS answered, and the crowd went wild. At the time, his fortune was just over 9 billion yen, CIS says, but producers told him to round up. To help support his claim, producers held up an enlarged statement from one of CIS's bank accounts, showing a balance of 1,269,223,316 yen. While the typical banker might not have recognized the figure on TV, day traders were well aware. "The guy's a star," remarks Naoki Murakami, a trader known as Murayan in the blogging world. Everyone read his 2 Channel posts. Some folks may not have appreciated them, but most understood he was joking. Known for documenting his trades openly online, not shying away from sharing both successes and failures, Murakami has gained a degree of celebrity himself. He is even compensated by brokerages like Matsui Securities to speak at investor conferences. He shares online chat room buddies with CIS, a common type of connection in Japan's day trader community, where everyone is interconnected through several layers of chat room relationships. Some traders are so close that they even go on vacations together. For instance, Murakami and 3 other traders went to witness Canada's Northern Lights a year ago, and the previous spring they chose Bali as their destination. In person, it's not easy to square Sis with the bravado of his online alter ego or his wealth. Pale from hours staring into computer monitors, he looks like the video game junkie he once was. Stress has given him chronic stomach pain and a dusting of gray at the temples. Sis's social circles consisted mainly of fellow traders, including individuals like Kenji Uemura, a former Sony engineer who authored a popular trading guide now in its 5th edition. Uemura, 39, sporting an Elvis-style hairdo and sideburns, claims to have accumulated 300 million yen over a decade of trading. Similar to Sis, he's not one for flashy displays of wealth. The type of person who squanders money on those things would never have reached this level, remarks Uemura, known among traders as Kimu. Self-control is so important. You have to conserve your assets. That's what insulates you from the downturns and gives you the ammunition to make money. Skipping class in high school to play pachinko, a hybrid of slots and pinball, as we know, Sis discovered he had a talent for winning games at a very young age. Sis shares that he barely managed to obtain his degree in mechanical engineering because he spent much of his college time immersed in the fantasy role-playing game Ultima Online. Confined to his bedroom, he dedicated days on end to exploring the game's virtual world, accumulating weapons, treasure, and food. He describes this period as an early lesson in the acquisition and safeguarding of assets. Wicked keyboard skills were a must. He mastered them all. He memorized over 100 keyboard shortcuts like Control-A to gulp a healing potion or Shift-S to draw a sword, and effortlessly navigated between them without glancing away from the screen. Some people can do it, some can't, he remarks with a shrug. However, the game imparted a more significant lesson, knowing when to make a strategic retreat. I was a pretty confident player, but just like in the real world, the more opponents you have, the worse your chances are, he says. You lose nothing by running. That's how he now plays the stock market. CIS says he bets wrong 4 out of 10 times. The trick is to sell the losers fast while letting the winners ride. For him, a well-played stop-loss is just about the most beautiful trade there is. That's why he believes a less attention-grabbing SoftBank trade than the one in February might turn out to be his most strategic move that year. On the first trading day of the year, he sold 4.5 billion yen worth of SoftBank shares. Although he incurred a 2.5% loss on that day, he exited the position with a 650 million yen profit. He had been building this position since mid-October. After his sale, SoftBank experienced an 18% decline in the following month. Later, regulatory filings revealed the reason. Capital Group, a massive U.S. fund trader, had been unloading the shares. Stocks entered the picture for Sis when he was in his early 20s and working as a designer of industrial shock absorbers at a small manufacturer. He began by betting on what he thought were undervalued companies, and he lost money. He found success after a friend gave him a piece of advice: forget the fundamentals. Sis doesn't subscribe to the Nikkei or any other newspaper, nor does he scrutinize earnings reports or parse central bank statements or spend much time looking at moving averages or other price chart patterns normally associated with technical trading. Instead, he keeps his ears open in the chat rooms and his eyes glued to bid-ask screens on which he monitors the market's appetite for its 300 most heavily traded stocks. If there's one basic principle, he says, repeatedly and slowly, as if instructing a child, it is this: buy stocks that are being bought and sell stocks that are being sold. This has deeper implications than it may seem, said Hirsch Sheffrin, a professor of behavioral finance at Santa Clara University in California and the author of Beyond Greed and Fear, a 2007 book that explores the role of psychology in investing. Sheffrin argues that the human mind is inherently inclined to bet on reversals, highlighting the psychological aspects that influence investment decisions. It's a phenomenon called the gambler's fallacy. At a craps table, for example, players tend to shift their bets toward numbers that haven't come up, even though the odds don't change with each roll of the dice. In the same way, even the savviest investor has a built-in bias for buying when stocks fall and selling when they go up. Like all day traders, he liked to capitalize on momentum. If you can get yourself out of that mindset and bet against the crowd who act instinctively, then you have an opportunity to make money. After 2 years of mastering the art of riding momentum, Sis claims to have made 80 million yen by day trading discreetly while holding a regular job. In late 2003, he decided to leave the traditional office life behind and transition to working in the market full-time. Since then, there have been more than 1 million trades, Sis estimates. Early on, he held most positions for just seconds at a time, making hundreds of moves each day. Now that he has more money, there's no choice but to hold positions longer, because shifting such large sums in and out of the market influences prices. In early July 2014, as a slow trading day was winding down, CIS sent an email containing a screenshot of his brokerage account at SBI Holdings. The snapshot resembled others he had shared in person throughout the year. On that day, unrealized gains were in the red, 200 million yen. His portfolio included 254,000 shares of Toyota, 4.2 million shares of Nomura Holdings, and 6 million shares of Mitsubishi UFJ Financial Group, among a dozen other positions. The total portfolio amounted to 13.2 billion yen, financed with 4.4 billion yen in cash. He anticipated that entire portfolio would likely be sold off within the next few days. One thing CIS wouldn't sell was a 100-share stake in Yoshinoya Holdings, operator of a fast food chain beloved by cash-strapped college kids. "It's a little keepsake," he explained as he quickly walked to a mahjong parlor in the Roppongi nightlife district, where he has a regular 3 p.m. game with trader buddies. When CIS wasn't betting on stocks, he was gaming elsewhere. He played low-stakes mahjong most afternoons after the market closed and is ranked in the top 99.94 percentile of 3 million players on a site called Tenhu, where he played under the name CIS. When he's not playing mahjong, CIS is often engaged in poker or blackjack, both online and occasionally in person. He mentions being barred from South Korea's Walker Hills Casino in 2011 for card counting during his visits. Most of CIS's wealth is in stocks and cash. He also holds corporate bonds and gold, he says, and has stakes in 3 small businesses. Tax records show he owns 2 apartment buildings, the larger of which, a modernist cube in central Tokyo with a French bar on the ground floor, could easily be worth the 700 million yen CIS says he paid for it, according to an estimate from Tokyo real estate consultant Mount Partners. Many of the day traders in CIS's circle can be considered wealthy, especially after the bull market of 2013. But CIS is on a different level. How he managed to build a fortune of such size is a subject of much speculation among his peers and the world. It could be an ability to spot weaknesses in trading algorithms used by the big banks, Murakami says. Or maybe it's the simple fact that he doesn't get rattled, says Masahiro Kawata, a trader who plays mahjong with CIS. Kawata designed the trading interface that most serious Japanese day traders use to shave valuable seconds off the order process. It's called T++ Speedy Stock Order Tool. Kawata says his friend can think like a machine. Then there's his single-mindedness. CIS doesn't seem to regard trading or amassing money as a means to anything. Trading is the point. Winning is the point. It's not a sentiment CIS shares. According to him, if you just consider compound interest, it should be pretty easy. Only a handful of his peers know his real name, and no one has watched him work. CIS didn't offer a complete accounting of his investing returns and his wealth for this story, and some of his claims can't be verified. For all you aspiring money managers whose interest is not just gathering assets, but to outperform the market, then realize that the more money you trade, the harder it will be. Having too much money to trade is one of the biggest hindrances to a money manager's performance. This is a great inspiring story, it really is, especially when all you hear nowadays is all the reasons why it can't be done. It can be done, but not by 99% of the people out there. Your biggest obstacle in trading is you, and many can't get over that hump. In 2005, billionaire investor Masayoshi Son sought new ways to grow his wealth, despite already possessing $4.3 billion. But not everyone crumbles under such pressure. During this time, a figure known as BNF gained recognition through a remarkable J-Com trade. He became a Japanese legend, celebrated as the J-Com man. Yet, to BNF, it was merely one trade. His life consisted of simple pleasures, cup ramen, anime, and the solitude of day trading from his room. Even after earning a great 2 billion yen from a single trade, BNF's drive remained unaltered, always seeking the next challenge. As he navigated newfound fame, an impending global bear market threatened the big financial bubble of his lifetime. Recognizing the need to cut through the noise, BNF adhered to his unorthodox anti-establishment approach. He refrained from seeking favor from those with deep pockets and established connections, instead choosing an unpretentious, unprofessional trading setup within his modest apartment. This approach symbolized BNF's deep trust of the prevailing financial system. This is the incredible true story of how a broke Japanese college student turned a small sum of $13,600 into an astonishing fortune of over $153 million in just 8 years. Let's go back to where it all started. Back in 1986, in the bustling city of Osaka, a young BNF was leading a life that felt somewhat monotonous. Spending most of his days indoors, it seemed like a routine existence. But then, an unexpected blessing came his way, and suddenly his world became a lot brighter, adding in him the belief that one could outsmart the system. BNF was experiencing the typical college life, filled with experimentation and soul-searching. His daily routine consisted of indulging in ramen, anime, and sake. Little had changed until that one fateful day in 1998. It was then that NHK, a famous Japanese TV network, aired a 4-part series searching into the world of finance. The first episode, intriguingly titled The Man Who Lost $50 Million, chronicled the life of the legendary hedge fund manager, Victor Niederhofer, a man known for his speculative prowess and his fund's roller coaster journey through the world of options on index futures. This TV series, in particular, left a profound impact on BNF. It stirred something within him, igniting his passion for the world of finance, trading, and the lifestyle it offered. In fact, he was so inspired by the documentary, Victor Niederhofer's life, and his trading acumen that he even based his trader name, BNF, on Niederhofer. The allure of trading and the freedom it promised resonated deeply with BNF. This was the life he had always dreamed of, but there was a stark contrast. BNF wasn't born into privilege. At that time, he was just a broke college student. The prospect of amassing savings to begin trading seemed like a distant dream. Learning about trading was equally daunting, especially without the vast resources available today, like YouTube. In the 1990s, Japan had limited resources and textbooks on trading, particularly trading via a computer. There was a scarcity of information, but none of this deterred BNF. The excitement of potentially making millions through trading consumed him, and he was captivated by the intricate world of stock charts. Despite the odds stacked against him, he was resolute about becoming a day trader. During his college days, BNF undertook part-time jobs, working tirelessly on weekday nights and weekends. Aside from covering his rent and cup noodles, he saved every penny he could. In the gaps between college lectures and work shifts, he devoted every available moment to studying charts. Day in and day out, he analyzed price movements, observing the ebb and flow of stocks, particularly those within the Japanese Nikkei index. Over time, he started to discern patterns and meaning within the intricate dance of stock prices. In the absence of readily available information, he embarked on developing his own theories about how the market operated. BNF committed himself wholly to this endeavor, sacrificing his time and social life. After 2 years of relentless effort, working part-time jobs and immersing himself in chart analysis daily, BNF had scraped together $16,000. The moment had arrived. He was ready to confront the markets, armed with youthful enthusiasm, determination, and discipline. However, the market he encountered was far from forgiving. As history tells us, in the year 2000, the global stock market was reeling from the bursting of the internet bubble, also known as the dot-com bubble. Yet, what many might not be aware of is that Japan had already endured a significant asset bubble burst in the 1990s. This period, often referred to by Japanese economists as the lost decade, witnessed asset prices plummeting by over 70%, leading to a decade of profound economic distress. BNF, after 2 years of chart analysis, faced initial losses in the trading world. However, these setbacks led him to develop a straightforward yet brilliant strategy. In a bear market where fear dominates, people tend to oversell declining stocks, fearing further losses and underestimating short-term recoveries. BNF's strategy was known as contrarian trading. He observed that during bear markets, traders often panic and sell off stocks that deviated at least 20% from the 25-day moving average, with 35% considered a safer buying point. Prices would then rebound, allowing BNF to close trades with profits. But this strategy wasn't a guaranteed success. BNF encountered more losses than wins, causing his savings to dwindle. He realized that some market sectors posed greater challenges. Despite the setbacks, he understood that achieving overnight success was unlikely. so he concentrated on understanding his losing trades. Through a careful study of losing charts, BNF identified repeating patterns in specific sectors with varying deviation percentages. He noted that different sectors had their own deviation ranges from the moving average. For example, 22 to 30% for service sector stocks, 25 to 45% for post-dot-com crash IT stocks, and 28 to 60% for emerging stocks. By applying sector-specific percentages, BNF improved his timing and entry points during temporary market upswings. This required him to develop a keen sector awareness before market trades. With dedication, BNF began to achieve more wins than losses. However, by December 2001, the bear market grew even more turbulent, with a significant crash in penny stocks resembling a market-wide sale. BNF's friends from the two-channel community saw this as a golden buying opportunity, but BNF's instincts told him otherwise. Instead of buying everything in the midst of a fire sale, he focused on stocks that had dropped significantly more than the market average, with deviations close to 65% off the 25-day moving average. His decision paid off as the selected stocks rebounded within a short span, with some even doubling in just a few trading days. BNF's disciplined approach and his deep understanding of market dynamics yielded fruitful results. Had BNF followed the conventional path and bought stocks at typical levels like his friends, he would have suffered catastrophic losses. Instead, by the end of 2002, BNF had impressively grown his account to $1 million in US dollars. He had transformed into the prominent bear among Japanese day traders, and the thrill of his success was exhilarating. He was finally able to sustain his life through his trading. However, a great tragedy loomed on the horizon that would drastically alter BNF's worldview. It was a peculiar tragedy, considering the entire world was experiencing a massive bull run. While everyone else was ecstatic, BNF was feeling an overwhelming sense of stress. The tragedy, as it turned out, was the transition from a bear market to a bullish one. You see, BNF's trading strategy thrived in a bear market where fear prevailed, and his approach was tailored to such sentiment. But now, the market dynamics had flipped, and he found himself facing an entirely different approach. To continue making a living through trading, he had to figure out how to navigate and succeed in this new bull market. Adding to the stress of the situation, BNF now had a big amount of money in his pocket, and he was determined not to jeopardize the freedom he had earned. To minimize the risk of losing his hard-earned wealth, he knew he had to devise a system that could thrive in the current market sentiment. Drawing from his past experiences, BNF recognized the important role of market sentiment. To mitigate risk, he made a strategic decision. Rather than opposing the bullish sentiment, he aimed to create a trading strategy that would benefit from it. After all, in a bull market, holding on to stocks over the long term typically yields profits, but that approach didn't align with his day trading strategy. Instead of adopting a long-term hold strategy, BNF utilized his deep understanding of codependency within the Japanese market to clearly position himself to ride the wave of the bull market. When the market is bullish, core companies tend to rise along with the overall index. However, BNF recognized an intriguing pattern. Even in strong markets, not all core companies surged simultaneously. There were always some laggards, and that's where he saw opportunities. He would strategically invest in these lagging companies, riding their upward momentum for a few days or weeks before selling. Since these opportunities didn't present themselves every day, BNF transitioned to a strategy that involved just a few trades each month. Instead of forcing trades, he patiently adhered to this approach. Through years of experience, BNF had developed a unique perspective on trading, viewing it not as individual price actions, but rather as a part of a global, interconnected system. His unemotional discipline was the cornerstone of his success. This strategy proved exceptionally fruitful during the bullish market, and BNF's account grew by $10 million over 2 years. However, the story took a peculiar twist. It was December 2005, 9 a.m., on another typical morning at the Japanese stock exchange. The trading floor buzzed with excitement as several new tech companies had recently gone public, sparking traders' hopes of finding the next unicorn. But this morning, all eyes were fixated on a new stock, JCOM Holdings, making its debut on the emerging markets. Within minutes, panic engulfed the trading floor as JCOM appeared to be experiencing one of the most significant stock drops in history. Traders were baffled and hesitant to buy, fearing potential financial fraud. The internet erupted with discussions on this unprecedented event. Meanwhile, at Mizuho Securities, one man was grappling with a nightmare of his own. He had committed an unimaginable error. His job was to sell a single share of JCOM at 610,000 yen, but instead, he accidentally sold 610,000 shares for a mere 1 yen each. Once the trade went live, there was no turning back. Fortunately, the Japanese exchange had measures in place, such as limit up and limit down rules, restricting how much a stock could move in a single day to prevent extreme volatility. However, these measures proved insufficient. BNF swiftly seized the opportunity. In a matter of minutes following the incident, he made his move, purchasing 7,100 shares at the limit down price, securing an astonishing 49% stake in the company. He placed half of his entire account size on this audacious trade, and his protege CIS followed suit. Panic continued to escalate, and Mizuho Securities found themselves unable to reverse their erroneous trade. In a desperate bid, they attempted to buy back as many shares as possible, but they were not the only ones in the fray. Even institutional investors had caught wind of the situation, and demand for JCOM shares surged. The stock's price began to soar as the market approached its closing hours. CIS cashed out his profits and went as far as withdrawing the money from the bank, fearing potential government repercussions. However, BNF, unlike his protege, remained remarkably calm. He opted to take a calculated risk, selling only a small number of shares. He was worried whether he would face a substantial loss, potentially jeopardizing half of his account size by holding 6,000 shares of JCOM overnight. The big question was whether BNF would face significant losses or amass a colossal fortune overnight. While most traders would have been extremely stressed, BNF remained remarkably calm. To him, this was about more than just money. It was a game, and he believed his opponent had made a major blunder. The next morning, amid all the chaos, it was revealed that trading in JCOM stock had been halted. Large institutional players, concerned about potential legal repercussions, decided to return their shares and profits to Mizuho Securities. However, rogue traders like BNF stood their ground, refusing to sell. As time passed and the government showed no signs of intervening, Mizuho Securities had only one option left: a settlement. Mizuho agreed to repurchase the shares held by rogue traders at the expected morning price of the stock. Just before the halt, this opening price had been set at an incredibly high figure of 975,000 yen. BNF reaped an astonishing profit of approximately 2 billion yen, making it one of the largest profits ever earned by a bedroom day trader. His story grabbed headlines, and he became known as the JCOM man in Japan. Niche trading communities hailed him as a trading god, and even billionaire investor Masayoshi Son took notice of his extraordinary success. Despite the high-risk nature of his trades, BNF had appeared victorious and achieved legendary status. At this juncture, he had to decide whether to go professional. He had attained a comfortable and stable lifestyle doing what he loved. In an interview, he mentioned, "I don't enjoy taking money off the market. Seeing the physical amount of cash makes me fearful of how much I'm putting on the line in trading. It makes me a worse trader." BNF soon realized that he disliked the attention and fanfare that came with his newfound wealth. While the money offered a comfortable life, he had no desire to indulge in extravagant travels or high society living. He preferred the simple pleasures of sharing a drink in town with friends. He believed that excessive spending took away from his love for trading. What truly mattered to him was the art of trading. As BNF strived to maintain his modest and contented lifestyle, the markets were changing, and a familiar storm was brewing on the horizon. Little did he know that this would be his most challenging test yet, as he faced the emergence of a new bear market. It led him to return to his tried-and-true strategy, and even Japanese news outlets were covering the crumbling U.S. banking system. This was a major event, but BNF had been researching it for months. On September 13, 2008, he made a similar move to the one he made with JCOM, investing $6.5 million in Lehman Brothers stock. That year, Lehman's stock had plummeted by 73%. Japanese banks were considered safe and conservative, while Lehman Brothers was the fourth largest investment bank in the U.S., known for its strong reputation. BNF believed that a rebound was inevitable, but he made a critical mistake. He underestimated the level of corruption in the U.S. banking system and overlooked the fundamentals. He had broken his golden rule. The $6.5 million investment went to zero overnight, causing him much pain. After suffering such a painful loss, BNF vowed never to trade the U.S. markets again. However, the storm was far from over. The crash of the U.S. housing market led to a global financial system collapse. For bear market traders like BNF, Times of crisis presented opportunities. On October 10, 2008, sensing an opportunity, BNF saw blood in the water. The global financial system was in turmoil, and the Japanese markets, including the Nikkei 225 index, were taking a severe hit. The Nikkei had fallen, and BNF believed in the potential for a rebound. Following his old principles, he bought in. The markets continued to move against him, and as the market closed, he faced the decision. Should he cut his losses or hold his position overnight? Relying on his past successes, BNF chose to hold. However, the Japanese markets deteriorated further. In 2008, Japan was hit hard by the global financial crash due to its heavy reliance on exports and trade openness, especially to Western markets, which were now buying fewer consumer products. Japan had also become more susceptible to stock market shocks due to its increased trade openness. The next morning, BNF woke up to a sea of red numbers. His previous deviation targets no longer seemed effective. The index kept dropping, and BNF was on a losing streak, heading towards significant losses. While many traders might have reacted emotionally and desperately tried to recover their losses, BNF remained calm and disciplined. He focused on cutting his losses short, but the hits were starting to add up. He had to go back to the drawing board and adjust his strategy. BNF understood that timing the bottom was impossible for anyone, and he believed in his strategy, which involved gradually increasing position sizes based on the 25-day moving average deviations, tailored to different sectors. After careful analysis of the market, he recalibrated his deviation targets per sector of the Nikkei index. On October 27th, the Nikkei continued to fall, and BNF attempted another rebound. The market, however, continued to move against him. As time passed, the weight of his trades grew heavier. Watching anime to calm his mind, which had worked in the past, no longer had the same effect. He wondered if he had become too comfortable. On that day, he realized his greatness didn't solely stem from his strategies, but also from his ability to filter out the noise and maintain discipline while developing his deep understanding of the market. Rather than second-guessing himself and his vast experience, BNF decided to double down on his trading strategy. As the market remained against him throughout the morning, he went on a buying spree, taking diversified positions in many of the hardest-hit companies that constituted the Nikkei. His overall position grew to $64.8 million, spread across over 90 companies. After the lunchtime close at the Tokyo Exchange, a few top names began to rally, slowly lifting the Nikkei. This positive chain reaction spilled over to more of BNF's positions before the market closed. Confident in his understanding of the markets, BNF chose to hold his position overnight. The following morning, the market continued to rally, and that's when BNF started to unload his position, yielding a profit of over $12 million. BNF had once again ascended to godlike status, revered as a trading deity among Japanese traders. In the past few years, BNF has diversified his portfolio, investing in 2 commercial real estate buildings. Commercial properties tend to have longer-term tenants and offer favorable tax incentives. Real estate is also a reliable hedge against inflation. Although he sold one of his properties, his primary focus remained trading. With no sign of changing his lifestyle and his remarkable growth, BNF was on a mission to become the world's first billionaire bare bedroom day trader.